Today was a very eventful day in the markets, not only for the broad indexes, but as well as that you had a lot of meme stock action, a lot of which was to the downside. And I want to go over exactly what's going on with BBBY, how this is feeding into AMC, GME, and other quote-unquote meme stocks, but also why the markets fell today, because the S&P 500 did something in which we have not seen in a very long time. It was down 1.34% in regular trading and down 0.18% here in after hours trading. We have pretty much been going straight up in the S&P 500, and there is a very specific reason why the market sold off today, in which I want to discuss with you guys here in this video. So let's get straight into it. And first and foremost, why the market sold off today is this, and I think this is the best way to sum it up in like one sentence. It's of course, CNBC Pro article, so we can't go over it here on this channel, but we're gonna sum it up because you don't need to know all the mumbo jumbo that is said in this article. You just need to know what is actually going on. So it says the Federal Reserve's Jackson Hole meeting could shake up markets in the week ahead, and that's exactly what we have in store. Wednesday through Friday, you have the Jackson Hole Economic Symposium, and what that basically is Fed Jerome Powell, ECB Feds, different Fed members that come together globally to talk about monetary policy, where they expect inflation, what they plan to do ahead. And it's very telling because, after all, think about the market dynamic in which we have currently been in over the last couple of weeks. The markets have been going up because of what Fed Jerome Powell said, which was off script. Fed Jerome Powell basically gets asked questions every time they raise rates. You get the 2 o'clock report of what the Fed is doing, how they're going to raise rates, and then at 2:30 you get Fed Jerome Powell that comes on every single time. And that part of it is unscripted when he answers questions from reporters. And a reporter basically asked him, when are they going to slow down raising rates? Are they going to slow down the pace of rate increases? And it's common sense. Fed Jerome Powell said, yes, we are going to do that. Markets have since rallied, but we have not heard from Fed Jerome Powell at all since then, and he has been the sole reason for a 15 to 20% rally in the indexes. I don't think Fed Jerome Powell wanted that, and I think it's way too premature to say that we're in for new all-time highs, that this momentum can continue forever, or at least indefinitely over the next couple of weeks, next couple of months, and get us to that all-time high. I don't think we are there as far as the data is concerned. There's still an inverted yield curve in which we are more inverted than we have been since the year 2000, right? It's very bad. We're going into recession. Question is, how deep is that recession going to be? But also at the same time, inflation is 8.5%. So even very bullish analysts for their inflation expectations, meaning analysts that expect inflation to come down over the next couple of years at a very aggressive pace, while a lot of them are only forecasting to get to that 2% inflation by 2024, 2025. So that's a big problem, and I don't think the Fed is going to U-turn based off of the data that we are seeing. The economy is not slowing fast enough, and the jobs market is far too strong for a slowdown with the Fed. The last thing they want to do is repeat what happened during the 80s when the Fed did cut rates when the recession came, and then ultimately a couple years later you had inflation return even more aggressive than what it was that pre-recession. So long story short, I think the markets are looking ahead and they're saying, hey, the Fed is probably going to try to talk down the markets. They're probably going to reiterate that they will continue to raise rates, maybe at an even more aggressive pace, because the stock market has rallied so much. Stock market going up so much, as well as a job market that is hotter than we have ever seen in the history of the jobs market. Well, that's a recipe for the Fed to continue to raise rates, and I think that's what the markets are preparing for here today. And I think that's the big reason why the markets did sell off pretty much throughout the day. You did see a lot of weird bounces, But when the sell-offs came, they were very, very aggressive. We were at a high of 425.26 on the S&P once we started trading the first, call it about 5 minutes, 10 minutes of trading or so, and then we did hit a low at 421.22. So nonetheless, a pretty big round move, and we have not been down, 1.3% in a very long time. So I think that is quite telling. One of the stocks that did help lead us down, which is Apple. As you guys do know, I do have some put positions on Apple, and they have started to, start to print some decent tendies, but I think this is really only just the start. Apple has been on a very parabolic, just momentum like meme stock kind of rally. This is really like the hedge fund meme stock. If you want to call any stock a meme stock, you have to mention Apple in that list because the valuations don't make sense. Just where we're trading and how aggressive this has been, twice as aggressive as the COVID lows. You gotta be worried about Apple at least somewhat for a significant pullback. And if Apple pulls back, the markets pull back because Apple is 7% of the market weighting. Now let's talk about what happened in the world of quote-unquote actual meme stocks, if you were to hear that from a hedge fund, right? AMC, GameStop, BBBY, you guys already know the deal, what we were talking about, the stocks that have well outperformed the hedge funds over the last year or two. Well, AMC was down about 6.5% in regular trading, down 1.17% here in after hours trading. And a lot of this negativity beyond just the markets falling today is due to BBBY and Ryan Cohen. So Ryan Cohen, about a week ago, it was published, he bought $80 calls for January 2023, insinuating that BBBY could probably rally substantially higher from here. And that's not what happened, because Ryan Cohen just a couple of days ago came out with this intent to sell shares of BBBY. He has since exited out of his whole entire position, shares and options, causing the stock to drop 40.5% here today alone, and 11.33% here in after hours. So when you get these stocks that move together, that find momentum together to the upside, well, they also find momentum together to the downside, and that is most certainly what had the biggest effect on AMC stock here today. So let's talk about what's going on as far as a technical basis, and then let's go over the Ortex data. So as far as the AMC on a technical basis, we're sitting under $18 per share, sitting at about $17.80 per share, which is still above the 50 and 100-day moving averages. So it could be a lot worse here. Yes, we broke under the 200-day moving average, but we did move a lot back and forth here today, a very wide range to close, kind of in the middle. Not a terrible day. It could have been worse on a technical basis after breaking under the 200-day moving average yesterday. And I do imagine we will find support around $16 per share, which is the 100-day moving average here over the next couple of days, next couple of weeks. Nonetheless, the volume has remained about the same at about 50 million shares that are trading hands each and every single day. I do think the trading algorithms are mostly in play here, and I do think because those algorithms help push up stocks, BBBY, GameStop, AMC, when there's a lot of momentum to the upside, it also helps push all of them down when one of them gets really bad news, like Bed Bath & Beyond did get here today. As far as the RSI, that is at 46.07, so it is approaching those oversold levels, which you can just tell on a technical basis. Just look at the chart. I mean, you've been getting sold off pretty aggressive over the last couple of days, and the MACD is now firmly in bearish territory, so keep all of that in mind. Now, as far as the Ortex data, let's go ahead and take a look at the option activity, and we did see a lot of option activity. 126 orders totaling $16.2 million, positive order value of 16%. So a lot of option activity, but not a lot of positive order value. This means there was a lot of puts going through relative to calls here on the day. Same thing for yesterday, about 20% positive order value, which is not a big surprise given what has been happening with the actual share price of AMC stock. Now, if we take a look at the short interest, the value that is estimated in dollars, currently sitting at 1.85 billion. Estimated short interest of free float at 18.58%. Free float out on loan 28.24%. Shares out on loan 146 million. Days to cover 3.1. Cost to borrow 8.74 and 100% share utilization. Now you do have the cost to borrow average at 8.73, which is that number that you're seeing up here, 8.74 that I just said. Cost to borrow max sitting at 11.08% and cost to borrow minimum at 6.56%. So all in all, the data could be a lot worse here, and really what we have in store for this next week is going to be Jackson Hole from Wednesday to Friday. That's going to be the big market moving catalyst, and here in the next video we will be going over some of the other catalysts and how that could play into the whole Jackson Hole Economic Symposium and how we could be in for a lot more downside potentially. If you guys have not seen the last video I just put out, make sure to go and watch that because I literally went over my exact positioning, and not saying you guys should copy that, not at all. It's never a recommendation. You may lose all your money if you trade options, but I do think there is a lot of potential in some of the opportunities that I was portraying to you guys there in that video. So that's going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Get your free stock with Webull, Moomoo, and Public, but most importantly, enjoy the rest of your weekends, and I will see you in the next one.